Good morning, everyone. I'm Vince Lancy. It's, oh boy, 7:15. I thought I'd do a very brief, quick hit considering the weekend news and the fact that gold is down $100. Stocks are up 3%. So before I go through the markets, essentially, we're going to go through the main points of what happened over the weekend, how the market is reacting now, and hopefully give the beginning of a framework of how to look forward from both sides of the debate or discussion, depending on how you look at it. All right, top right-hand side, that's gold. Top left-hand side, that's the dollar. Lower left-hand side, the S&P 500. And the lower right-hand side is the VIX. Those are daily charts. Let's leave them at that for now. 10-year yields are up 6, 444. The dollar is 101.74, 132. Extremely strong. S&P 500 is 583, 167. The VIX is 1995, down 194. Gold is 32.22, down 102. Silver is 32.21, down 50. Copper is 461, up and down all night long, up 2.5 cents now. WTI very strong, up 220, 63.42. Natural gas 371, unchanged bid. Bitcoin is also volatile but in a tight range. 104 and change. Palladium 963, down 11. Platinum 982, down 15. Gold, silver 99 and change. Soy, corn, wheat up 2%, up 1%, up 10 basis points, 1060, 445, 524 and change. Okay, and you can see the China data there. We'll talk about that some other time. But China stocks are up as well. So you could see that the pattern is consistent with the news. Okay, it's risk on, out of safe havens, number one. Number two, industrial commodities, including oil, are relieved. This is very inflationary looking. If you're trying to tie the whole thing together, since we only have a couple minutes here, tying the whole thing together, if a deal gets done, you better take your expectations of rate cuts. You're currently like 3 for the year. You better drop them down to 0 or maybe 1. I don't know. But the rate cut expectations in the market are assuming tariffs would go on. So the rate cut expectations are going to be trimmed. What that does to the market, I don't know. But if the rate cut expectations are trimmed and a deal isn't done, you could have a big look. Uncertainty. We're still in an uncertainty situation. If I'm Powell. All right. To the markets themselves. Well, actually, to the news item that spurred the markets themselves, and that is. Bear with me here. We'll come to the homepage in a second. Okay, I think this is the most credible way to look at it. This is a statement from China publicly. China and the US will on Monday issue a joint statement reached at the 2-day trade talks in Geneva over the weekend. Asked what will be the exact timing for the release of the joint statement on Monday, Li Chenggang, apologies if I'm not pronouncing that right, China's international trade negotiator and vice minister of commerce, replied with a Chinese saying that, quote, if the dish is delicious, then the timing is not a matter. You talk about our idioms. All right. No matter what the statement is released, when the statement is released, it's going to be big news and good news for the world, Li said. Chen Weihao. Okay. Take that statement in combination with the U.S. statement, which is essentially Bessent's statement is more the one that I pay attention to. You basically have the same thing. They are on the same page. They're at least coordinating their public message, and there probably is some really big news. Whether big doesn't necessarily mean good, all right, in the long run, but we're looking at the market and what it's doing right now. Okay, so they're the two gentlemen involved in a negotiation, and they were the ones that gave that press conference and what was said. If you're looking to figure out at the very, very easiest level, at the very basic grassroots level, what this is about, I mean, really grassroots level, this is what it's about. The East wants multipolarity. The West wants fair trade. Okay? Tariffs have been something that nations have been using for years to protect their industry because they were worried about the strength of the dollar. that was a kind of a detente there, right? A balance of terror. You guys, this is us talking to the rest of the world. You guys want to use your money in transactions locally? You want a level playing field for currencies? Then drop your tariffs. Trump says, if you're not going to drop your tariffs, I'm going to bring mine up to yours. And in my meme there, that's what Bessent is saying. Zero tariffs, go pursue your currency, have at it. You want a free playing field? Well, then we need to have a free and level playing field as well. That's the grassroots of it. The world wants to go multipolar. The US also wants to be less of a global reserve currency. The accord would be we need to weaken the dollar so the world can share the stage a little bit better. We're willing to make room, my opinion. I think the smarter people are willing to make room for China on the currency stage if everyone else would drop their tariffs. And then we'll have at it and we'll battle you in trade because I think we would win, but that's neither here nor there. All right. Next, I'll do a little reminder. We had a busy weekend. There are 5 posts featured. That's the founders Goldman trade ideas. That's for founders, but it's a great picture, right? I love that picture. The actual story, if you're trying to understand it and you're not a founder, it's lower right-hand corner, deep dive Goldman's option trade ideas. That's a 3-hour thing on everything in preparation for China. But the first hour of it is solely devoted to trade ideas that China is recommending, not for this event, but for the next 6 months. So it's really helpful. I think if you are looking not necessarily at you want to learn about options, but it'll give you an idea of the bias, meaning everyone's biased bullish still, and dips are being bought. They even say it in the report. There's China insurance companies on the bid underneath, and there is a quote Asian sovereign entity. So there you have it. I think it's a pretty good primer in options, but at the same time, it talks about the marketplace pricing itself. Russia's gold strategy offsets freeze. That's a piece on it's a news piece, right? Flow show. I think some of you will be seeing that today. There's the bullion bank thing. Okay, so we're done with that. Next, the markets, the reaction, right? I actually just gave you I didn't give you what to look forward to. Right. So there's those 3 levels that I have been looking at, right? That is the final boss of ledges for me. Okay. There's no if this, then it's happened, right? So for me, it's pretty much happened. I could say there's one little hope, no hope. Below this line, I think we go to a moving average. That's a 30-day moving average. That's a 50-day moving average. I think below this line, we go to the 50-day moving average. Doesn't have to happen tomorrow. Doesn't have to happen tonight. Doesn't have to happen in the next 2 days. But I think, despite what I'm about to say about it's not over yet, I don't think you want to fade these moves. People have been positioned for them. The dip is being bought right now. That's, if you remember where I said China's physical demand was, right there. China insurers and central banks. I'm not sure where the central banks are, but let's assume that the central banks and insurers are right there. The fact that they haven't pulled back yet, because we've stopped, right? Or maybe they have pulled back. They're just putting a little bit less there, a lot less buying there. Tells you that, there's no done deal. If there were a done deal, this market would be trading 3,100, maybe 3,000. That's what I think. The good news is, if you're looking at this in a do I buy the dip, there are many less longs in this market than there usually are from the US side. So there's a lot less puking. CTAs are going to puke, sure. Number 1. Number 2, as I just mentioned, sovereign entity is bidding below. I'm quoting Goldman report. And the third one is, as we have been discussing since this day, the bullion banks were front running sovereign buying down here. So that's it. That's a situation. So below here, you're nervous, right? You're bearish to here. Above here, you know, not necessarily that we're going back up, but you know that the physical demand is still there. They haven't absorbed it, and the market could probably go the other way. You know, a lot of people were positioned for this bearishly, as discussed in the options thing. Okay. Uh, give me a second here. Staying with the charts in a cursory fashion before we move on to what could happen, right? There's the dollar. You know, I saw this a couple days ago, and I actually saw it in reading Helene Meisler. She's a great old school technician, and she said humorously, she goes, "If you squint," and she said it right here, right around here. It was last week. So if you squint really hard, you might see reverse head and shoulders there. And you know what? Looks like it's similar to that pattern. You could describe that in stocks as well. And you could also say it's not head and shoulders in gold, but it might be a descending top, you know, cracking here. Anyway, I'm just bringing that up. All right. So there are two sides to the story that are going to be presented. I think the most important aspect for me as a meta analyst is that they're both on the same page publicly. So they're going back with positive messages to their people, not negative messages about the other guy. So US had been China needs a deal, China sucks, right? And China was probably saying something to that effect. We don't trust the US, et cetera, et cetera. The US sucks, right? Now they're going back saying productive, constructive deal. It's Trump. It's bad cop, good cop. You know, it's like haggling with someone in Tijuana over something you want to buy. It's an argument followed by a hug. Now, it's not a final hug by any means, but that's how it works when you're negotiating with Trump. The question is, if I know it, does China know it? Of course they know it, right? So is this over? Well, part of me says we're looking at a developing Mao, you know, China, Nixon type of deal where we get that whole picture I drew. Tariffs are lowered, multipolarity is encouraged, and that gold would be the hub of that. Gold's going to be allowed to rally if the dollar is going to be weaker relative to the world. Gold could be, I truly believe and have believed that gold is the sponge for the rest of the world's wealth. You know, hey, our currencies are too weak. What are you going to do about it? Well, you guys own gold, right? Fine. We'll take our foot off gold's throat and we'll let it go up. That's the US talking. China, from the China perspective, is you know what? We like gold and you're not going to put your foot on gold's throat anymore. We're going to make it go up, right? So either the dollar is going to weaken against the world or gold is going to strengthen. And that's what China's been doing, de-dollarizing, taking their money off of a soft peg to the dollar and putting it on the gold. And that's why we've been saying for about 3 years, way ahead of the curve, or maybe just wrong, that we're moving towards a golden yuan sort of situation, which if you're a Bitcoiner makes you think that the US is going to switch to a Bitcoin type of situation, or at least Bitcoin as a tether for the dollar, for the bond market. Anyway, okay. So there's the charts. There's really not a lot to say. I mean, you know, we can talk about gold, silver here for a second. All right. Put silver up. And put that there. Okay. Very briefly. Silver is hated. Okay. Not hated. Silver is used to offset gold length. And so now everyone who's selling gold right now is buying silver. Not everyone. Some people sell, everyone is selling gold. Some people are selling gold and buying silver back. Okay. Some people are just selling silver, going, oh, I'm long gold. There's news. I'll just sell silver to hedge it. Right. But there's every permutation is buy gold, sell silver. Right. So now they're unwinding it a little bit. So you're seeing some silver be bought. Then you've got the industrial guys going, oh, oil's up, copper's up. I'll buy copper, sell silver. That's what the banks pitch all the time. They go pure play, gold, risk off. Pure play, copper, risk on. Silver, I call silver the Goldilocks metal. But Wall Street's into specialization. What's silver? Well, it's part this, part that. Well, then let's just sell it every round we get. I know that, and if you listen to uh, the 3-hour video, you can use the transcript to search it. I discussed that at length. They actually say it with regards to platinum. They're now selling platinum when they buy gold. That's just how it works. That's how the world works, unfortunately. So I believe that the gold silver thing still has to play out. Oh, let's buy gold, sell silver. But I think it's going to be someone's going to get their face ripped off when this is done, and I don't know when it will be done. But I'm aware of it. I will not sell silver, right? If I buy gold, I just won't do it. It's something I would do in the past. I am looking to buy silver when this whole complex kind of bottoms, But right now, it's just basically be long oil, right? The heck with copper. It's too volatile, with too unknown. Okay. Looking ahead, we know what the US point of view is and their vision. In China, from mainland China and Taiwan, the word coming out is from people that are in finance, from Western minds that are in Asia, are coming out saying that China views this or is projecting this as, what's the phrase that was said? Trump came to the table, but he didn't kneel yet. So they're presenting it as the US is just as eager to do this as they are. And they're also presenting it locally as it's almost like I said this, slow and steady wins the race. So they're going to continue to, now they're projecting positive, positive. They're playing nice, nice, right? But there's another date coming up, and it has nothing to do with trade, but it has everything to do with China's position. And that's May 20th. May 20th is President Lai, if I'm saying his name right, his speech in Taiwan. It's an acceptance speech, and how fiery he comes out will affect China's predisposition to playing nice still. So if Lai comes out and says, screw the mainland, Shanghai Shek forever, well, then China's going to be like, you know what? Xi's going to be like, you know what? It's not going to be a very good day for you, and it's not economic. Economically, China is really struggling. That's sovereign. That's like their thing. It's like Alaska seceding. That's how they view it now. Um, uh, the dynamics are interesting, and I don't know them that well, but the insight that I've gotten from a Goldfix founder is that even though Lai is essentially a representative of the U.S., meaning Taiwan is basically U.S. politically based, Trump is not a big fan of his, and who knows what this guy is going to say. So May 20th is a date that I think you want to be aware of, because if he comes out fire and brimstone, separation, then China's going to say, oh, you guys are doing that color war shit again? Fine. Let's go back to the table, and we have no problem being a little more authoritarian with our people, but we're not going to do that shit. I mean, I don't know that that's going to happen, but these are things you have to think about. All right, I'm Vince. Final market check, 106, right? Okay, dead in the water. Short-term rallies are going to be sold. Oh, no, I'm not sure about that. This is a range. We don't look in between here and here. This is your shelf of buying, right? So I don't want to put a number on it. People like to put, this is the number, this is the line. There's no number, right? Just pay attention and be flexible. That's it. I'm Vince. Have a great day.